Before we begin with today's market analysis, I would like to mention our new channel membership options. This is a special introductory offer which will open access to members-only trading strategy videos that are based on high-value, high-conviction investment strategies and are characterized by superior risk-to-reward metrics that target massive, market-beating returns over time. Please note, this is a limited time offering of just $9.99 per month, but members that sign up during this introductory period will be able to lock in this new low rate for the entire duration of the membership. Again, this early sign-up period will allow you to lock in this low introductory membership rate for life, and these new low introductory rates will only be made available for a limited time. Monthly membership prices will be going up after this short introductory period ends. With these comprehensive, members-only trading strategies, I only choose high-quality, high-conviction stocks that are easily accessible, with relatively low share price values that are designed for easy trade positioning, and combined long-term trading gains are expected to far outperform the monthly membership rate of just $9.99 per month. Join now to lock in your low introductory rate and start trading stocks with the pros. Now back to the video. Here's the daily price chart for Advanced Micro Devices Incorporated, stock ticker AMD. So here we can see that the stock is trading under a fair amount of selling pressure here. The declines have been large enough that we really do need to pull out here on the longer term time frames, because if we were just to focus on, say, the 5-minute chart or the 15-minute chart, we would really be seeing nothing but this downside activity here. And what we will be pointing out in this video is the fact that these recent declines have done a fair amount of damage to these longer term charts. So this is not really the context where it would make much sense to focus on the shorter term time frames. Instead, we really do need to focus on the daily charts themselves. So as we can see here, this prior support zone that we were watching really came in at this would be just below 155. Call this 154.10, as we can see here, and the break below here has been quite forceful. There are a couple of reasons for this. One would be the fact that this is an area of historical support, but then in addition to that, you have the rising 200-day exponential moving average coming into contact with the same area. This would be this rising blue line here. So essentially, this came in just around 152.50. So there's about $1.50 that separates this historical support zone with the 200-day exponential moving average. So this is a significant area of support that really should have been able to contain downside selling pressure. All of that said, it does need to be kept in mind that there are many broad sell-offs that are currently occurring in the market. It wouldn't really be reasonable to expect AMD to kind of hold up under all of this selling pressure when all of the rest of, essentially all of the rest of the market is really selling off. But most of this selling activity, this bearish price action, really has been focused on the technology space, and this is dragging down many stocks with it. So, I understand that some people are probably getting concerned about these price declines, but that does need to be kept in mind because this is not exactly an AMD specific story. This is very broad based selling pressure here. So but we do need to kind of take stock of what's going on here, and sort of understand what type of damage this current move has done. So, currently we were looking at this roughly 153.80 level, and then this confluence here with the 200-day exponential moving average. It's significant for a few different reasons. It's probably the most commonly watched moving average in the market, number one. And then, it's also it's the longest term moving average on this chart. And then finally, it does suggest that share prices themselves have now fallen through all of the major exponential moving averages. So all 4 of these moving averages have now been broken to the downside, and that's in addition to the historical support break. And we also have to point out this Fibonacci zone, which has also been broken. This is the 618 retracement. 61.8% Fibonacci retracement of this dominant trend move here. To identify this trend move, we're looking at the October 2023 lows, which came in at 93.12, and then extend this move to the all-time highs for the stock, which came in at 227.30. So, if we're using this as our dominant trend move here, we can see, if we kind of drill in here, we can see that um, this has now broken the 61.8% Fibonacci retracement, which would be this light green line back here. So we can see that we're currently trading under this value, as well as the price lows from May 2nd, May 2, which came in at 141.16. So, this is several important, support breaks here that have occurred. And the unfortunate reality here is that this essentially occurred after a false breakout to the top side. We really did have a sideways trading range that was starting to develop after the post May declines that occurred. We were starting to get a consolidation phase here. That would be kind of this area, this zone here. And then we did actually see a breakout to the top side. This would have occurred July 10, but this is an important date because July 11 is the day that started to kind of usher in these broader market declines. This was really in my view, this July 11 date was kind of the most important trading date of this entire summer period because it really did mark an inflection point, a turning point for the stock market as a whole and specifically for the technology space. So, this is kind of an unfortunate breakout here because, this occurred a day before, these highs were reached a day before, the broader market sell-off started to unfold. And as we can see here, AMD was not immune to that selling pressure. So this was a false breakout. And I would assume that some people did probably buy this breakout and then had to get stopped out somewhat quickly because, these losses started to unfold quite quickly, and we even saw gapping moves here to the downside. So this is a fair amount of damage that has been done here, and the real question is, where will we find a bottom? So currently, the level that I'm watching right now does come in at this 786 retracement, the 78.6% Fibonacci retracement of this dominant trending move here. This currently comes in just above, we can call it just below 121.50. So just above 121. But that would still give us roughly another $18 in potential downside here. The reason I'm really pointing to this is mostly due to the fact that we have broken through all of the major exponential moving averages on the daily chart. This is not a 5-minute chart. So these exponential moving averages carry a lot more weight. These daily moving averages are what would be most closely watched by the market as a whole. Even people that don't really use chart analysis still pay attention to these daily moving averages. So these downside breaks are being watched by many people, and they are the moves here have been decisive, and they have been definitely negative in terms of the breaking point that has been seen in the EMAs themselves, the exponential moving averages themselves. So at the moment, there's really nothing here to support prices to the downside. There really is no major support zone here. We've got a little bit of support that came in back during the January 4 trading period, which would have come in at 134 would be the low from that trading period. So roughly $5 lower from here. But overall, this is starting to look very heavy. And it does look like the lower 20s are probably the next downside target. So here's the current market analysis for Advanced Micro Devices Incorporated, stock ticker AMD.